dual listed on the Botswana Stock Exchange, and the JSE's main board reported a 70% drop in headline earnings a share for the 6 months to August. Joining us in studio to look at these numbers closer is CEO Andy Payne. Thank you so much, Andy, for joining us today. Just looking through these numbers, at the end of the day, we have seen a massive impact when it comes to the forex impact that we've seen. Has that been the biggest challenge for your company over the last 6 months?
Yeah, look, I mean, I think there are a lot of other challenges. I think our markets are still soft out there, but having said that, we've seen real growth in the business. I think one needs to read into our results a little bit. I mean, I think the drop in the headline earnings per share is mainly by virtue of the fact that in the prior year we had a large unrealized profit on a forex gain on the restatement of our dollar liabilities. So I think if you take it out of our business, if you look at the top line from a revenue point of view, we're basically tracking in line with last year. It's a 5% increase, mainly by virtue of the fact that we've consolidated 2 other companies in which weren't there previously, our Zimbabwe business. If we didn't do that, we would be basically in line with last year in a revenue point of view. And if you break that revenue down and you take it apart, essentially we've had real growth in beds, which is fantastic. We've had a slight yield increase, which is great. And we've had a negative increase or negative translation effect on the exchange rate.
And of course, your cash scenario also looking very good.
Yeah. So I think going down one level to gross profit. We're trading with same margins, which is fantastic. Our EBITDA is the same as last year as well, which is great. We put 97 million pula onto the balance sheet. The HEPS just measures the extraordinary gain that we had last year, and that's obviously the reason why we've had the dip. So I think the real positives is that we've seen growth in the market, that we're accumulating a lot of cash. As we sit today, we've got 183 million pula in reserves, in gross cash receipts, 161 net of overdraft. If I add to that the undrawn facilities, we've probably got another approximately 250 million. And then we're looking to land approximately 93 million pula on the sale of North Island, which we'll take to over 300 million in resources available for.
So a very strong balance sheet. What do you plan to do with the cash at hand? I'm sure many investors and shareholders are asking that.
Look, I think a very important initiative was to strengthen your balance sheet in this time. I think we've realigned our business. It's very healthy. It's well maintained. We'll be using some of the resources to lift the level of service up even further. I think the importance of that is that it gains market share. So we're quite excited about that initiative. Obviously, we're going to respect our dividend policy, which we said we would pay at the end of the year. So that's important. And then we're looking at organic and acquisition growth opportunities.
So you will be paying out a dividend at the end of the year?
Absolutely, yeah. Well, assuming all things being equal, yes.
All right, well, just looking at the rand and the way that it's strengthening against the US dollar, the rand strengthening against the pula as well, pula strengthening against the US dollar, and this, of course, creating quite a bit of havoc for various industries in these regions. What kind of impact has it actually had on your business? Obviously, it's got to do with forex gains, but at the end of the day, it's also got to do with appetite into coming visitors and tourists coming into these regions, which, of course, has also been a very big factor for the leisure industry.
Look, I think one must understand that we price in dollars, mainly in dollars. So, from our point of view, the impact is immediate. It's a translation impact. Our competitors who price in rand are obviously going to have an issue with regards to the pricing of their product because it's getting more and more expensive day by day. So we're gaining market share as a result of people, I suppose, our competitors not selling, which is, is one benefit in the process. I think the reality with the exchange rate is that we have to re-engineer our business. I mean, we've got to make our business work at 6.5. And that's the next effort that we're going to concentrate on. I think we work fantastically well at 7. At 7.5, we've got a fantastic business. But at 6.5, we've got to look for, more efficiencies in our business model.
And that said, I mean, costs have also been increasing for your company. So
Absolutely,
you really have to start streamlining operations.
Yes and no. I think we took the costs out of our business in the first year of the recession. The immediate year post 2008, October 2008. This year we need to increase our cost base, otherwise it'll hurt our culture. So, assuming that being said, we're looking at different opportunities. I mean, mainly scale opportunities where we can put more revenue on the same cost base, and there are a lot of those opportunities out there. And we really believe we can get more efficiencies in our business model.
Interesting to note. So the Soccer World Cup depressed demand for your products, and you citing in your report to that people opted to stay home and watch the World Cup from their homes. So that's quite interesting that it did. I mean, what kind of impact are we looking at here when you say
Look, we've
depressed
measured
demand?
it. Yeah. Look, I mean, having said it, when we listed, we actually indicated that we put together a team to mitigate the negative impacts. We recognised there were going to be these impacts. We've measured it now at approximately 4,000 beds. We know it's mainly in our Namibian business, and I think the World Cup's been a great story for some, and it's been, not so good for others. And we just one of those businesses which are too far away from the centres to get the benefit of the World Cup spend. We'll get later benefit from the PR, but the immediate impact of the World Cup was 4,000 beds. Yeah.
Well, let's touch on the Zimbabwean operations as well. I mean, dollarization in this country, things looking far better as well. How do you see things playing out in Zimbabwe and the role that you'll be playing going forward?
Again, look, we've seen 18% growth in demand for our beds, which is fantastic. We firmly believe that it's a fantastic product. So we believe that moving forward, there's a lot of opportunity in Zimbabwe. So we will be looking at it very, very closely. It's a competitive product to our best product, which is Botswana, in terms of our game and Zambia. So yeah, it's a great opportunity for our business. We're well positioned as well.
And the highest growth area going forward, where do you foresee that coming through?
Look, I think Zimbabwe's got huge growth potential. It used to be our biggest business, to give you an idea.
It's also interesting to note, I mean, you dual listed on the Botswana Stock Exchange and the JSE as well, and you're citing increased governance and compliance costs. And of course, this being one of the big issues when you do list on a bourse, that you've got to start, focusing on compliance as well going forward. Do you think you're going to start handling these kind of costs far better going forward now that the listings are behind you?
Yeah, it's an interesting debate. Often I believe these costs are necessary. I'm a firm believer that the more organised you are, the better you can run your business. So, in one sense, it helps you to become more efficient. In another sense, it's a little bit of a bind. But I don't really see it as a negative in the organisation. Liquidity is a bigger problem than governance costs, if you ask me. We've got to try and drive up liquidity in the stock, and that's obviously a challenge going forward.
And where do you see liquidity going? I mean, obviously that is a very big issue for many companies that are listed on the Botswana Stock Exchange, not so much in South Africa, of course, but you do need, of course, to get the investor interest as well.
Look, I think since the day we listed to today, we've basically been in a closed period. So, that's had an impact, a negative impact on our liquidity. I think obviously our free float is only 20%. That's also had a negative impact. So there are a lot of initiatives we need to try and drive. Also, we're not in a bull market. We're a small cap share. So that also has an impact. But I think if we can hold our own in this climate and plow through it, I think things will improve.